The traditional career path often involves a direct exchange of time for monetary compensation. This creates a linear income model, where earnings are directly proportional to hours worked. Individuals typically commit to working for many decades within this framework. The primary objective is to accumulate sufficient savings throughout their working life. These accumulated savings are intended to provide financial security during retirement. A common misconception posits that wealth is exclusively generated through direct labor. This perspective suggests that financial growth is inherently limited by one's active working hours. It implies that without direct, continuous effort, wealth cannot accumulate or expand. This view overlooks other mechanisms of wealth creation, such as investments or passive income. Understanding this misconception is crucial for developing broader financial strategies. Financial independence often arises from income streams that do not require continuous personal time investment. This fundamental concept is known as passive income. Passive income allows individuals to generate earnings with minimal ongoing effort. It is a key component for achieving true financial autonomy and freedom. Passive income is defined as earnings from an enterprise without active involvement. It represents a financial strategy where income generation is decoupled from direct labor. This model shifts from trading time for money to leveraging existing assets or systems. Examples include rental properties, dividends, royalties, or automated business ventures. This presentation explores various strategies for generating passive income. We will outline 7 distinct approaches to building income streams with minimal ongoing effort. Each strategy is evaluated based on its required time commitment. Capital requirements, including initial investment, are also a key evaluation factor. The potential for initial earnings will be assessed for each passive income method. This framework provides a comprehensive overview for selecting suitable passive income opportunities. The objective is to achieve financial gains through various strategic approaches. These methods are designed to generate income without requiring continuous, direct involvement. This principle focuses on creating systems that operate autonomously or with minimal oversight. Such approaches allow for the accumulation of wealth while preserving personal time. The ultimate goal is financial growth coupled with increased personal freedom and time efficiency. Dividend investing focuses on acquiring shares in companies that distribute a portion of their profits. These distributions, known as dividends, are payments made to shareholders. Dividends represent a share of the company's earnings, paid out regularly. This strategy provides investors with a steady income stream from their stock holdings. Dividend investing offers a distinct approach to generating returns from stocks. It differs fundamentally from capital appreciation, another common investment strategy. Capital appreciation relies on selling a stock at a higher price than its purchase price. Profit from capital appreciation is realized only upon the sale of the shares. In contrast, dividends provide regular income to shareholders. This income is received simply by holding the shares without needing to sell them. Dividend investing focuses on companies that distribute a portion of their earnings to shareholders. A key characteristic for investors is a history of consistently increasing dividend payouts over time. Companies demonstrating this consistency are often recognized for their financial stability. Those with 25+ consecutive years of dividend increases are termed dividend aristocrats. Companies with 50+ consecutive years of increases are known as dividend kings. These designations signify robust financial health and a commitment to shareholder returns. Dividend investing is a strategy for generating passive income through regular payouts from company profits. A common misconception is prioritizing a high initial dividend yield above all else. However, the stability of dividend growth is a more crucial indicator for long-term passive income. Sustainable dividend growth ensures that income streams can increase over time, outpacing inflation. This focus on sustainability provides a more reliable and growing source of passive income. Therefore, assessing a company's ability to consistently grow its dividends is key for investors. Dividend investing is characterized by its minimal time requirement for investors. It is often rated as a 1 out of 5 for time commitment, indicating low effort. The primary time investment occurs during the initial research phase. This involves identifying suitable dividend-paying stocks or funds. Subsequently, only periodic monitoring of the portfolio is required. This makes dividend investing a relatively passive investment strategy. Dividend investing is a strategy focused on generating regular income from company profits. It typically requires a substantial initial capital investment to be effective. The amount of capital needed is often rated highly, indicating significant financial commitment. A large capital base is essential for generating meaningful dividend income. Smaller investments may yield insufficient returns to meet financial goals. Therefore, access to significant funds is a critical factor for successful dividend investing. Dividend investing aims to generate regular income through company profit distributions. To achieve a target income, the required investment amount depends on the dividend yield. For instance, earning $100 per week, totaling $5,200 annually, is a common income goal. With a dividend yield of 2.5%, a substantial capital investment is necessary. To reach this income, an investment exceeding $200,000 is required at a 2.5% yield. Dividend investing is a strategy focused on generating regular income through company profit distributions. It is widely recognized for its potential to contribute significantly to long-term wealth accumulation. However, a primary characteristic of dividend investing is its capital-intensive nature. This means substantial initial investment capital is often required to yield meaningful returns. Consequently, this investment approach can be less accessible for individuals with limited starting funds. The need for significant capital can pose a barrier to entry for many potential investors. Automating a skill involves transforming personal expertise into a digital product. This digital product can then be sold repeatedly to multiple customers. The key benefit is that it requires no ongoing time investment for each subsequent sale. This process effectively scales individual knowledge and effort into a scalable asset. Automated skill products are digital resources designed to facilitate learning and development. These products enable individuals to acquire new skills or enhance existing ones independently. Examples include online courses, offering structured learning paths and interactive content. Ebooks, templates, and training programs provide self-paced educational materials and tools. Access to paid online communities also serves as an automated skill product, fostering collaborative learning. The core principle focuses on developing a product or skill once. This initial development phase requires dedicated effort and resources. Subsequently, digital platforms are leveraged for continuous sales and distribution. These platforms enable broad reach and automated transactions. The strategy aims to decouple income generation from the direct input of time. This allows for scalable revenue streams independent of hourly work. This method shifts the focus from directly trading time for financial gain. Instead, it emphasizes the creation of an autonomous income-generating system. This system operates independently after an initial development phase. It allows for income generation without continuous active involvement. Automating a skill requires substantial upfront effort for development and setup. The time investment for this process is considerable. This effort is rated as 4 out of 5 inches terms of time commitment. Significant time is needed to ensure proper functionality and integration. Automating a skill generally requires a relatively low financial investment. The cost is rated as 1 out of 5, indicating minimal expenditure. Expenses often involve modest fees for necessary software or platform subscriptions. This low barrier to entry makes skill automation accessible for many. Earning a consistent income of $100 per week is an achievable financial goal. This target can be met through various strategic approaches and product sales. Consider selling a digital product priced at $25 as an example. To reach the $100 weekly goal, only 4 sales of this $25 product are required. This demonstrates a clear, quantifiable path to generating the desired income. Such a method highlights the potential for focused effort in digital product sales. Automating a skill is a strategic approach for creators to enhance their income potential. This strategy allows for significant leverage in their work. It enables creators to scale their income effectively. The key benefit is increasing earnings without a proportional rise in working hours. This method optimizes efficiency and maximizes financial returns for skilled individuals. Online content creation involves producing digital assets for various platforms. These digital assets can include videos, podcasts, articles, and other media formats. The primary goal is to generate revenue over an extended period. This revenue generation is achieved through diverse monetization models. Content creation is a strategic process for sustainable online income. Digital platforms have revolutionized content creation and distribution for individuals. Platforms like YouTube, TikTok, and various podcasting services are key enablers. These platforms allow individual creators to generate and share their own content. A significant benefit is the ability to access advertising revenue streams. This access was historically exclusive to large media corporations and traditional outlets. Individuals can now monetize their content directly through ad placements and sponsorships. Each piece of online content published functions as a valuable asset. These assets are capable of generating various forms of income over time. One primary method is through ad revenue, where advertisements are displayed alongside content. Sponsorships also provide income, involving direct payments from brands for content integration. Affiliate marketing allows creators to earn commissions by promoting products or services. Direct product sales, such as merchandise or digital goods, represent another income stream. Generating passive income through online content offers significant potential financial benefits. However, this method demands a substantial upfront investment of effort and resources. Consistent production of high-quality content is crucial for long-term success. Building an engaged audience requires persistent dedication and strategic content delivery. Achieving traction and sustainable passive income streams necessitates continuous work and adaptation. Creating online content demands a significant time commitment from creators. The effort required for content production is continuous and extensive. Sustained audience engagement also necessitates ongoing time investment. Consequently, the time required for online content creation is rated as very high. Creating online content requires minimal financial investment. The cost factor for content creation is rated as very low, typically 1 out of 5. Often, only basic equipment is needed to begin producing content. Access to online platforms is usually sufficient for distribution. Monetizing online content, especially in its initial stages, presents significant challenges for creators. Achieving a modest income, such as $100 per week, is often difficult at the outset. This difficulty is rated as a 1 out of 5, indicating a high level of challenge for new creators. The primary hurdle lies in the time required to cultivate a substantial audience base. A larger, engaged audience is typically a prerequisite for effective monetization strategies. Therefore, initial earnings are often low due to the nascent stage of audience development. Generating income from online content creation initially presents significant challenges. Despite these difficulties, this revenue stream offers substantial growth potential. Upside potential materializes once content achieves significant reach among its audience. Sustained engagement with the content is crucial for maximizing income generation. Private investing involves providing capital to companies not listed on public stock exchanges. Investors typically exchange capital for an equity stake in these privately held businesses. This differs from public investing, which involves purchasing shares of publicly traded corporations. Private investing offers direct ownership and potential for significant returns in unlisted ventures. Private investing involves various roles for investors seeking to fund businesses. Angel investors provide capital, often taking smaller equity stakes in early-stage companies. They offer essential support and guidance to nascent ventures. Strategic investors are more hands-on, offering significant resources and operational expertise. Private investing involves acquiring an equity stake in a company. As the invested company grows, the value of this equity stake appreciates. Investors realize returns when the company is acquired by another entity. Alternatively, returns are realized if the company goes public through an IPO. Private investing involves placing capital into companies not listed on public exchanges. These investments often target early-stage businesses, which inherently carry significant risks. The success of such nascent companies is highly uncertain, leading to potential capital loss. Therefore, a crucial strategy in private investing is diversification across multiple ventures. Diversification helps mitigate risk by spreading investments, reducing reliance on any single company's outcome. Private investing typically requires a moderate time commitment from investors. This commitment is rated as a 3 out of 5 on a general scale of time intensity. A significant portion of this time is dedicated to thorough due diligence. Due diligence involves comprehensive research and evaluation of potential investments. Ongoing monitoring of portfolio companies is also essential, requiring continuous attention. Private investing often requires a moderate level of capital commitment. This is rated as a 3 out of 5 inches terms of financial requirement. Significant capital is typically needed to acquire meaningful stakes in private entities. This ensures investors have a substantial influence and potential for return. Earning a consistent $100 per week from private investing is generally considered difficult. The ease of achieving this weekly income is rated low, typically 2 out of 5. Private investing returns are predominantly long-term in nature. Income usually materializes through large, infrequent payouts rather than regular weekly earnings. Private investments offer a distinct financial avenue compared to public market options. A single successful private investment can generate returns significantly higher than public market investments. This potential for outsized gains is a key characteristic of private investing. However, this high reward potential is intrinsically linked to a higher level of risk. Private investments often involve illiquidity, less regulation, and limited information. Thus, private investing embodies a high-risk, high-reward financial paradigm. Affiliate marketing is a performance-based marketing strategy. It involves promoting products or services offered by other companies or brands. Affiliates earn a commission for each sale or lead generated through their efforts. This is typically tracked using a unique referral link provided to the affiliate. The commission is paid when a customer makes a purchase via this specific link. It creates a mutually beneficial relationship between product creators and promoters. Success in affiliate marketing hinges on establishing trust with the target audience. Audience trust is a critical factor influencing the effectiveness of affiliate recommendations. Recommendations originating from trusted sources are significantly more likely to convert into sales. Therefore, building and maintaining audience trust is paramount for affiliate marketing success. Affiliate marketing offers a distinct business model with several operational advantages. A key benefit is the elimination of inventory management responsibilities for the affiliate. Affiliates are not required to handle product storage, shipping, or stock levels. Furthermore, customer service duties remain with the original product creator. This means affiliates do not manage inquiries, returns, or post-purchase support. Product development and innovation are also the sole responsibility of the creator, not the affiliate. Affiliate marketing seamlessly integrates with various content creation platforms. These platforms include popular channels like YouTube, blogs, and social media. This integration allows for the natural embedding of product recommendations. Content creators can suggest products or services relevant to their audience. This approach enhances engagement and drives conversions through authentic endorsements. Affiliate marketing requires a moderate time investment, rated 3 out of 5 for effort. This commitment involves various activities crucial for success in the field. A primary activity is the consistent creation of engaging and valuable content. Content creation is essential for attracting and retaining an audience. Building and nurturing an audience is another key component of the time spent. These efforts collectively drive traffic to affiliate links, generating potential earnings. Affiliate marketing is recognized for its remarkably low financial barrier to entry. The initial capital required for launching an affiliate marketing venture is minimal. It typically involves very few mandatory expenditures, often rated as 1 out of 5 for cost. Primary costs may include website hosting, which is essential for online presence. Additionally, optional advertising expenses can be incurred to boost visibility and traffic. This low overhead makes affiliate marketing an accessible business model for many. Affiliate marketing offers a pathway to generating income online. The ease of earning approximately $100 per week in affiliate marketing is moderate. This level of ease is rated as 2 out of 5, indicating it requires some effort. Initial effort is needed to create and promote content effectively. However, income can transition to a passive state over time. This occurs once content achieves strong search engine rankings or consistent audience traction. Building a digital tool, often referred to as software as a service, SaaS, is a key modern business model. It involves the development of a software solution designed to address a specific user problem or need. This software is typically hosted centrally and accessed by users over the internet. A defining characteristic of SaaS is its subscription-based revenue model. Users pay a recurring fee, granting them access to the software and its features. The software as a service, SaaS model, offers significant revenue scalability. Even a small customer base can generate substantial income. This is achieved through modest, recurring monthly subscription fees from each user. This demonstrates the inherent scalability of the SaaS business model. Building a digital tool, especially a software as a service, SaaS product, demands significant resources. The time investment required for such projects is exceptionally high, rated at 5 out of 5. This extensive duration is due to the complex nature of software development cycles. It necessitates substantial efforts in initial development, coding, and quality assurance. Ongoing maintenance, updates, and support also contribute to the continuous high effort. Building a digital tool, often as software as a service, SaaS, requires a moderate financial investment. The estimated cost is rated as 3 out of 5, indicating a significant but manageable expenditure. Key financial outlays include initial development costs for software creation and infrastructure. Additional expenses cover ongoing hosting services and essential marketing efforts to reach users. Building a digital tool, or SaaS, presents a low ease of earning $100 per week. This difficulty is rated as 1 out of 5, indicating it is highly challenging to establish. The initial development and market entry requires significant effort and resources. However, once established, a SaaS product offers the highest long-term scalability for income generation.